Good morning, everyone. This is Marshall Giller bringing you the morning comment for February 27th. After several weekdays, that's week as in W-E-A-K, days following Fed Chair Janet Yellen's testimony to Congress, the dollar turned around yesterday and gained against all the other G10 currencies and most of the EM currencies that we track. It started strengthening after St. Louis Fed President Bullard said the Fed should remove the patient terminology from its statement in March. The dollar gained even more after the core U.S. CPI rate for January came out higher than expected, suggesting that indeed low energy prices are the main reason behind the slowdown in inflation, as Yellen argued in her testimony. Moreover, the slight deflation in the headline CPI boosted real average earnings, which bolsters the Fed case that the labor market's improving. Meanwhile, the euro moved lower, and many euro bears, who were just waiting for the signal to jump back in, decided the time was right to reestablish their short euro positions. Eurozone economic news yesterday was favorable, but euro-dollar hasn't been that responsive to European economic news recently, probably because there's no indication that faster growth in Europe will translate into higher inflation and thereby influence ECB policy. Meanwhile, the fact that Bund yields are now negative out to 7 years is probably discouraging investment in European bonds. Oil fell sharply on a report that Iran and the 6 major powers were nearing an accord over Iran's nuclear efforts. That would add to the glut of oil. However, the U.S. Senate Foreign Relations Committee plans to introduce legislation giving Congress the power to review any nuclear deal with Iran. That makes it much less likely that any deal would get U.S. approval. That doesn't mean I'm bullish on oil, but there could be a bounce today. In Japan, the usual end-of-month data deluge showed that industrial production rose faster than expected, but retail sales fell more than expected, and household spending fell too. This combination is likely to convince the authorities that export demand is essential and help to keep them firmly in the weak yen camp. As for today's highlights, German CPI for February is coming out. As usual, after several regional states released their data in the course of the morning. We'll be looking at the larger regions for guidance on where the headline figure may come in. In Sweden, fourth quarter GDP is expected to show an expansion from the third quarter, which could strengthen the Swedish krona a bit. Norwegian official unemployment rate for February is coming out. In the U.S., the second estimate of fourth quarter GDP is expected to be revised down, which could be dollar negative. The Chicago PMI, final U of M consumer sentiment for February, and pending home sales for January are also coming out. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.